Hello and welcome everyone to the week ahead commodity report, where we of course will be reviewing the markets for the week ahead. So first of all, what do you need to know as we go into a new week? On Friday, we saw another breakout on gold, tapping 1 month highs up 2.5% on the day, 7% on the week. And of course, we saw the US Federal Reserve announce a massive stimulus to combat the economic toll from the coronavirus, and with that we've seen an additional 2.3 trillion in support for the US economy. Now, of course, as you very well know by now, that provides a huge catalyst for breakouts on the precious metals, particularly with gold. So I hope many of you have capitalized on that move. It's something that we've been discussing during the course of our week ahead commodity reports, that the next key levels that you wanted to look out for, particularly if gold was able to break above 1,650 US dollars per ounce, would be a breakout to that 1,700 zone. We want to observe whether gold can then start to clear above that level. As I'm sure you're aware, for those of you that follow us at the Gold and Silver Club, we've continued to maintain two long positions on gold. One of those trades that we had from 1480, we banked on Thursday for 2,000 points, and that was within a period of just 3 weeks. So the sort of trade that could take you months to generate that sort of return has happened within just 3 weeks. And also the previous position where we had entered at 1,589 US dollars per ounce, that's now up 900 points in just over a week. And again, these sort of gains would typically take you several weeks and potentially months to get the same amount of profit in such a short period of time. We've mentioned it before, but during extraordinary times like we have at the moment, these provide you with extraordinary trading opportunities as well to take advantage of this volatility. I'm going to go through it in more detail, exactly how we've traded this, how many of you have also been able to follow along. If you're not making money in these markets, you are absolutely doing something wrong, because it has been absolutely crystal clear how to take advantage of these opportunities. The Federal Reserve doing unlimited quantitative easing. We've seen additional stimulus last week, again 2.3 trillion from the Federal Reserve, and this all provides a huge catalyst for the precious metals. Now, with that said, it's Easter weekend at the moment, so many people around the world, they're on lockdown, they're on quarantine, and there's really never been a better time for you to learn a research driven approach to the markets. Trading, of course, is recession proof, and this can generate high income returns for you, which is exactly what you want to be doing during this time of lockdown, where likely you have more time on your hands. If you've ever thought to yourself you wish you had more time to trade, well, now you have more time to trade. So with that, let's move over to the charts and we'll talk you through exactly what we're looking at here as we go into next week. Now, first of all, let's start off with gold here. And the first point you want to be aware of is the V-shaped reversal recovery that we have seen on gold now over the last 3 weeks. And certainly from many of the conversations that I've been having at the Gold and Silver Club, for those of you who've joined us and for those of you who've been watching our week ahead commodity reports, I'm really pleased that many of you were switched onto this. We discussed it previously, particularly with palladium, which was one of the first movers to really get going with a V-shaped reverse recovery back towards the neckline. Now, looking at it this way, you may not be able to see it, the magnitude of the move here, but let me just give you an example of this move. That was an 8,400 point move on palladium in the matter of 3 days. Okay, so just to give you an example of how long that had taken previously, so let's have a look at the peak here that we put in at the end of December and how long in 2019 it took palladium to move 8,000 points. Just to give you some scale here, so we're actually taking it all the way back down to July to June. So that's 6,000 points. So we're not even at 8,000 points. That was in the previous 6 months for palladium. So just to give you an idea, a move on palladium that took 6 months to generate just over 6,000 points, that happened in 3 days. And this is really where the penny should drop at the moment. The volatility that we're seeing at the moment allows you to make gains of extraordinary levels that would usually take you several weeks or months to generate. It's happening in a matter of days here. And that just goes back to the gold example here. So we'd mentioned previously at 1,480 US dollars per ounce. We remember this level very well because this is where we caught the breakout from the moves that we had for the seasonal play at the end of December, where we caught the 1,000 point breakout, 2 trades on that, 2,000 points that were generated here over gold during that 2 month period from end of December right the way through to the end of January. So that took approximately a month or so to generate that sort of return. Whereas what we've seen here with the recent breakout and support again from 1480, which held magnetic level again, hedge funds, money managers, they bought in on that dip. We saw 1-2, that sort of magnitude of a move occurred within 2 days. So the equivalent move that took gold a month to generate, it happened in 2 days. So it's really just to bring it home some of the incredible moves that we're seeing across the commodity complex at the moment. So with that said, that's all very well and good, but what are we looking at next? Well, first of all, gold here. We banked one position on Thursday for 2,000 points. That was 1480 to 1680. As you know, we bought the previous week as well. So we bought at 1589. We still continue to hold this position, which is up about 940 points into the close on Friday. And what we observed, again, many of you were switched onto this, we saw the end of quarter profit taking. So the final 2 days of March, the final 2 days of the quarter is where gold had the sell-off, which is very typical. And then the reversal here happened on the 1st of April, first day of the new month, first day of the new quarter. 1, 2, 3 days of follow through. Many of you are switched on also to the counter flow that you normally see over Monday and Tuesday. Then we had the reversal and then the breakout at the beginning of last week, which we've capitalized on. And of course, it's just been a 4-day week last week due to Good Friday for Easter here. Now, what we want to observe very closely on the Sunday open is whether we're going to get a gap higher and break above all of this resistance, and whether gold can clear above 1700. This is gold spot price, by the way. The gold futures market are trading at 1,752 US dollars per ounce into the close. There's a $70 difference or 700 point difference between gold spot price versus the future price at the moment. As many of you know, Goldman Sachs, going back to mid-March, put out a buy signal on gold, and that was in fact one of their targets, 1,800 gold to reach that level over 2020, and we're not that far away in terms of gold futures price right now. So again, what I'm looking at as we go into the Sunday open here on gold, we closed at 1683. We remain long gold going into the open. If it does have a big gap higher and breaks out back towards the 1700 level, I do want to take some further profit off the table, but then I want to observe whether gold will very simply gap higher and then potentially just fill the gap and roll over to where it had previously closed on Friday. If it does that, you might start to see it pull back further as we go into next week for potentially some counterflow over Monday or Tuesday. I will be looking out for that. At the same time, if gold, if it can break above 1700, only have a very shallow retracement and then hold above 1700 here, and we start to make our way higher, then of course we're going to be on for quite a large move here. If we break and close and hold above the 1700 level, I would very simply continue to hold some of my position to see if we can run up to the next magnetic levels, such as 1750, which is what the futures market has done here as well. So of course I want to keep a very close eye on spot price and also futures price into the open. Now, as many of you know, you also want to track the gold silver ratio. So again, for those of you who are not aware of how the gold silver ratio works, essentially when you're tracking the gold to silver ratio, if it is breaking down, and it recently broke out to 125 to 1, which was the highest on record, that married up with silver breaking down to 11-year lows, platinum breaking down to 18-year lows, and at the time this is where gold broke down to $1,450 per ounce. So again, a high gold silver ratio puts pressure on the metals, but when the gold silver ratio is going down, which it is at the moment, that can help gold, silver, platinum to break out higher. So you want to observe that inverse correlation with the ratio. Keep an eye on that correlation. So that's what I want to look at going into next week. So I'm expecting potential for a gap higher. It might be that gold doesn't gap higher, but looking at the pre-market, the Dow Jones is set to gap lower by about 150 points at the moment into the Sunday open. So I'm expecting a potential gap higher on the open here for gold. If it doesn't gap higher, of course, I want to then still see if it can make a breakout towards the 7-year highs here, which reside approximately around the 1700 zone. And then what we want to look out for at this level is whether it's just going to be a third tap of resistance and then sellers come come back in, whether we get a bull trap and then the potential for a reversal, or whether we're just going to hold above that zone, whether we can break above 1700 and build a base and start making a move high. And of course, we want to track gold futures as well and see what key levels that they are able to get to as well. So for me, gold is definitely a market you want to keep a very close eye on as we go into next week. And then let me bring it over to crude oil here. So crude oil, we were in and out of this trade 3 times last week. Just an amazing market to be day trading at the moment. So the first trade that we took last week was off the Sunday open, where we got in on the gap lower and we took advantage of a 200-point breakout to the upside, which was great. We caught that nice retracement higher, 200 points locked in. We then got into the trade again later on in the week, took advantage of a quick 155-point breakout to the upside, awaiting for further developments off the back of OPEC, and we really wanted to see how the market would close on Friday. It's been a classic move here, which is a bull trap to the upside, so essentially luring in many retail traders. Over 80% of retail traders are currently long on crude oil. So we've seen a trap to the upside. So all the FOMO traders who bought in too high on Friday, many of them cannot withstand a 500-point pullback like that. For crude oil, we then closed almost limit down on the day here, and now it's going to be very interesting into the Sunday open how this price structure does develop. Now, a few points to note. Hedge funds and money managers, they have increased their net long positions on crude oil in the latest week. They have also reduced their net sell shorts. We do definitely continue to see support coming in between 20 to 23 US dollars per barrel. Oil is frequently gapping lower on the Sunday open. So what I want to observe is where will oil open on Sunday, and will it immediately get supported and start to fill that gap? And will we see buying evidence again as we go into next week? I would suggest we're going to see more range-bound trading. And really, if you put the levels on right now, we're simply ricocheting between $20 up to just under $30 per barrel. And at the moment, the $30 handle just below that is a great area to take profit off the table. And at the moment, the $20 handle up to approximately 23 is a great area to look for buying evidence to come in. And this is a very tradable range. Again, these moves that we've seen here on oil, going back to the previous week, this breakout to the upside was the biggest ever one-day move in history on oil. You can take advantage of this volatility. A 500-point sell-off on oil within one day. Again, this sort of volatility is huge. You can see oil so far in April is up 14% on the month, but within a single day it sold off by 12% on Friday. So again, this volatility day to day to trade it is absolutely fantastic. And again, if you've got more time right now to be in front of the screens to learn a research-driven approach to the markets, there's never really been a better time to take advantage of the volatility that we're seeing at the moment, the quick gains which you can produce in a very short period of time. Of course, trading, it's recession proof, and you can generate a high amount of income very fast when you trade. So again, what's really important to understand in these markets is that you do require an edge. Technical analysis alone is not going to cut it. You need a research-driven approach which is taking into account market intelligence, data, fundamentals, geopolitical news, marrying that up with cycles in the market, seasonality, looking at what the hedge funds, the money managers are doing versus the newbie traders in the market that use 100% technical analysis. Market makers know where their stop losses sit in the market. That's why they're getting chopped up all the time. And then you need to apply a research-driven process to your trading, and that's what will get you results, and that is where you will get your edge in the market, not just by using technical analysis. So with that, if you would like to learn a research-driven approach, there is an opportunity for you to do so. As a member of the Gold and Silver Club, you get access to our exclusive live trading room webinars. You get access to real-time trade alerts, real-time trading research and market insights, access to our private members academy website, and also support and one-to-one mentoring. For more information about the service, just go to www.jointhelivetradingroom.com. The link is also below this report in the description. So just click on the link, make an application, and we will of course get in touch with you ASAP. And do make sure you subscribe to our YouTube channel. That way you're always kept updated with all of the latest commodity reports.